Hi, everybody. Welcome to the watch list of Sunday, June 23rd. All right. Last week was eventful. We had a big rejection at the level we plotted on for over a month now. We had a big rejection. And so there's a chance that we could get a bit of a pullback in the market, but we need some more confirmation. And we'll talk about what that confirmation looks like. But first, let's really try to see what are the most probable days that we'll see trending days in the market. So we always start with the economic calendar because ultimately this market moves on time and price. It's all about time and price dynamics, where if you can't just have a good setup but it not be the proper time, because a good setup is actually a bad setup if time is not in alignment. It's very rare that you see great big moves happen in the market when there's nobody involved in the market. So you want to make sure that there's a lot of liquidity in the market, and that's when you can expect big moves to happen. And that typically happens when there's news events in the market. So let's look at what the news events may look like this week. So on Monday, we have a lot of Fed speakers. I don't really have high expectations on Monday. Friday was a choppy day, and so you want to be careful on Monday. I would say be careful. There is a chance we could break the range on Monday that we made from Friday. So there's a chance for that, but I don't have the highest expectations, being that it's just a few Fed speakers, not really to talk about. You got consumer confidence on Tuesday. Fed speakers, though, largely not too crazy. The big, and then Wednesday is nothing. So the big draw this week is GDP. You got GDP on Thursday, and on Friday you have PCE. So it looks like the later half of the week should have some nice price movements. And so typically on days when I come into the market, like Monday, Tuesday, and Wednesday, and I don't have high expectations, what I do on Monday, Tuesday, Wednesday is I say, all right, I'm gonna drop my size. Now, if the market proves to me that it's trending and I see like some fire setups after that, of course I can add on to the position, or in my next position I'll go full size or something. But I typically start my days off with lower sizing because my expectations are what? Low. All right, so keep that in mind. So now moving on, let's talk about the actual charts now. And as y'all know, I have different people in the audience. I got some forex traders, I got some futures traders, I got some options traders. Some people trade commodities, crypto. We talk about everything in here. So I'm gonna go through all types of tickers today. And it's not just about tickers. We try to teach through the watch list. It ain't just, yo, this is gonna happen. It's how did I know this would happen? So let's talk DXY right quick. And with DXY, as you've seen, we've been looking at this bullish OB for weeks now. Anybody who's been with me for weeks, y'all know we've been staring at this bullish OB. And I've been, although this was plotted here long before price got to it, I told y'all that when price got to it, I wasn't high on this OB. I'm like, I doubt this OB is going to send us to new highs. And I had my reasons for saying that. And it had to do with me feeling like, okay, if we really wanted to come to this objective I have from the monthly, we probably would have got there. And so since we fell short, I just didn't have faith on this order block. Like, I don't expect a deep retracement when we're this close to a liquidity target. But it's cool. We ended up coming down here. We ranged here for so long. And although I love this order block, in context, I told y'all that's why I was doubtful on it, because in context, I ain't like it. Visually, it's a beautiful order block. Like visually, this is something I will put in my PowerPoint slides and say, hey, this is what the order block should look like. You know what I'm saying? I got all the elements I like. And lo and behold, it is ultimately working, y'all. So this is one thing here that is proving to me that, like, hey, it might prove me wrong. And not in an ego way, but like there's not really many things that I get wrong out here. Y'all been with me for some weeks. So far, this is one thing right here that DXY is using this order block. It was sloppy and it was nasty, but it might bring us to new highs. And right now, we just gonna ride the wave. So with that being said, we just adjust right away. We made a bullish order, a bullish fair value gap here on DXY. And once again, I know people are new, so just why we bring up DXY, because typically if DXY is bullish, then you can see some bearishness coming to the market. And you can see this green candle here was Thursday. If y'all seen what Thursday looked like on the NASDAQ and the S&P, you can see why. I mean, look at DXY. From the minute it opened up, we didn't even tick to the downside. Like literally it opened up on Thursday and ran straight up for the whole day. The whole day DXY was ultra bullish. And then it followed through on Friday. And we actually left a bullish fair value gap here now. So this is something we'll be watching. We want to see if price does retrace. You want to see if it respects this fair value gap. If it doesn't, then you may see DXY come into these lows somewhere, come down in the head. So a lot is going to depend on this fair value gap. Now, it's ultra bullish, obviously, if we don't even touch it. Like if price, which is There's definitely a high chance of that, by the way, by the manner in which their fair value gap looks. So there's different types of fair value gaps in the market. So this type of fair value gap sometimes, or a good amount of times, we don't even usually come back to this one. So I'm looking to see if DXY even comes back to this, or if it just literally continues to the upside. And so if it does, then your question is answered. And you see right here, this yellow line, it says the weekly highest body. So you know that I've been vocal about how price doesn't always go for the top of the wick. Sometimes it just comes to the highest body on a swing point. And so that's a low hanging fruit objective. I didn't even plan on showing this, but an example of that is how perfectly did we execute on DraftKings, y'all? Like from the watch list. This was last week's watch list. We talked about DraftKings making a big bullish move. Look what happened last week. And guess what? We caught the whole move, literally the entire move, this whole thing. And guess where we exited at? Guess where we exited at? The weekly highest body. You see what I'm talking about? So if I was being, typically when people teach liquidity, they say, oh, we're going for buy side liquidity. So they telling you to, take profits on top of this high. But like I said, price don't always go there. And I'm not saying it can't get there, but especially anybody who trades options, do I want to be a part of this? Isn't this going to ruin my contracts? I don't want to be a part of this retracement. So even if it goes back up, I'm good on that. I literally got out at the top. Like literally, as soon as I was live trading this day, so my phase 2 members might remember this. Literally, I had my alert set. It went off. I took profits. I'm out of there. Really highest body, and that was the top. So, once again, you want to take low hanging fruit objectives, just things that price typically targets that's almost like a guaranteed target. So for the upside here on DXY, that's why I say, weekly highest body is just the next place it may end up going to. But if it retraces, we'll be watching this area. If this area does not hold price and send it back bullish, then I expect some further down moves here on DXY. So that's the plan there. And something else we've been looking at is the 2-year bonds. And so once again, I know I have some new people. So what we do here on these watches is we typically come in, we check the time. That's the economic calendar. And what we do is you check for sentiment. What is the overall sentiment expected to be this upcoming week? So DXY helps us determine that. The 2-year bonds help us determine that. Low key, I use Bitcoin to help me determine that too. So we'll talk about that in a little bit too. But and why? Because those are leading indicators. Like the bond market moves first. And overall, every market really doesn't move unless the US dollar is making movements. That's another thing. So we got to start there and then we build off of that. So here with the 2-year, you seen it was real bullish. It took out buy side liquidity, beautiful, but it didn't displace. It didn't move aggressively past this buy side target, and then it starts coming to the downside. But I don't like how, let's say I'm a bearish person on this ticker, right? What I would want to see now is a bearish fair value gap. This is ugly, but ultimately at the same time, it is chopped. So we can see how it breaks the range. But whenever I'm expecting a sweep, I don't like when my sweeps look like this. So, we're going to see. It came into this BTSMC. This was the target last week. Last week, we started the week off by expecting a return into this purple area. So first thing we did last week was come to this purple area. Then we popped out of it, but it's been choppy ever since. So you want to wait for it to break this overall range. I think if it comes back to this fair value gap again and it closes under the 50% of it, then you're going to see a much deeper move back down into these lows. And if the 2-year is coming down here, then it's going to drag the stock market with it. Because when this goes down, so does the NASDAQ, so does the S&P. So obviously it's in a range. You got to be careful. But if it loses the CE, if it loses the 50% of this bullish fair value gap, then you can expect a deeper move down into potentially sell side liquidity here and maybe even lower because you have these engineered lows down here. This is another liquidity target we could go for. And so ultimately, like I said, that will take the stock market with it. So if DXY has bullish potential and the 2-year has bearish potential, that's something to watch. That's something to watch. So we'll keep our eye on those. Now, I'll touch quickly what I'm thinking about on Forex. So here on the Euro ended up projecting this 4-hour SIBI. I'm gonna do Forex really quickly because I think that's probably the minority of my audience is Forex. But it ended up rejecting this 4-hour SIBI. We were watching this one. We watched this one at first, and we said price could reject this, but we have to get confirmation on this one. I would have preferred this one to reject it than this one. But ultimately, you see that it rejected where? Right at the 50% of that to the tick, right? You let the precision on it, and then we ended up dropping off. And then we came here, We didn't actually run through the wick. That's why I told you, be careful always targeting the wicks. It didn't actually run through the wick. It pushed back up, came back down. Ultimately, we ranging, right? So with that being said, we will be watching this hourly fair value gap, bearish fair value gap. We'll see what price wants to do on it. It's consolidating, which is also a very bad sign. Typically, when price is truly bearish, they're not going to give you a chance to join the move. So they're not going to do this typically and then drop. I'm not saying it won't happen. I'm just saying that it happens way less than this. This is what we typically see. We typically just see quick movements. If it really was going to be bearish, it would just reject it and go. It wouldn't spend too much time right there. So I would be careful about Euro making a deeper move back to the upside. I'm not saying it won't come back down, but just even initially, at least initially, it could invalidate this SIBI based on the consolidation. But once again, we'll be watching that area. I think if it loses sell side here though, like if it comes under this yellow line, then Euro could definitely make a much deeper move into these lows down here. I don't really see anything else that should be holding Euro up getting into these lows. So we'll be watching what it wants to do in this area. I would set probably price alerts under this wick, because I think it could get pretty bad under this wick, especially how we did ultimately come off of this SIBI rejection. So, let's make a lower low. It's already in a downtrend, ain't it? So let's make a lower low, right? So that's Euro. And GBP, you got we got into the daily BTC we were targeting. We were looking for price to come in here. Now it's a waiting game. You want to get confirmation. So learning moment. If we have a daily POI, which is this daily bullish fair value gap, and this is this one has high probability when you're bullish on a higher time frame, right? And so, but if you're bearish, then you would obviously ignore it because you expect it to get traded through. And so in this scenario here, if it's a daily POI, what time frames would you want to see confirmations on? I'd say the highest time frame would be the 4 hour, but ultimately to me, I think the best time frame to confirm a daily POI is the 1 hour. So on the 1 hour, I want to see us, now that we came into this area, I want to see us make some bullish fair value gaps. And you don't have to take the first bullish fair value gap you see. You don't have to take that one. But if it forms, you should be looking to see if we respect it. Now that it's there, if we respect it, now you could get involved, because we're probably going to make some nice moves to the upside. That means that's confirmation of this POI working. But notice how we came into it, and have you seen any bullish fair value gaps yet? We staggering out of it. It's not a good sign. It doesn't mean it won't happen. I'm just saying wait for it to happen. So if we start making bullish fair value gaps, and then we're also respecting those or not even touching it, even better, amazing. That's some bullish confirmation for you. And that's because it's a daily POI. So I would let the hourly confirm that. If you want to be ultra cautious, you could let the 4 hour confirm it too. Let the 4 hour make them and respect them. All right, so, my fault. Let me just say for that ticker, and then if it doesn't use it, to me, it's gonna make a much deeper move. Like I would target these lows next, at least. So, GBP, a lot depends on this bullish fair value gap right here. New Zealand dollar, I think this one already hit my initial target so far, but look how it ended up being a sweep, because I was making this watch list yesterday. And so this happened so far. We already took that target that I had on sell side, and then we pushed right back up. And so right now it's most likely going to come back and run these highs. So in the short term, we're probably going to run these highs next. But ultimately it's in a range, so you want to just be careful. I would ultimately, I always tell you how to let price break ranges before you get involved, because you get caught up in some nonsense. So I wouldn't really take trades on that ticker right now. This ticker here, I'm bullish on it for US dollar Swiss franc. I'm bullish on it coming to this highest body, the highest body on the daily chart. That's a target I have on that. And then last Forex ticker I have is USD JPY. I'm looking to take 160.386, and that is there's a high there from many moons ago that we never took, right? So you got this high right there. We came really close to it. What was that, last month or something like that, maybe a couple months ago? And now we're back in that area. I think we're gonna not only run that red wick to the left of my screen, but the wick I told you from before. I just think we're gonna make this bullish move now. It has a lot of bullish sentiment on it. Obviously, you see we made a bullish fair value gap and stuff. But we always got to play in both ways. So ultimately, if we don't respect this, if we come down this low and don't respect it, that's when I lose faith in bullishness. That's when I would say, okay, we're gonna make a pretty deep retracement down into here. So a lot is gonna depend on this one. All right. But other than that, I'm bullish into that area. So all right, last thing for sentiment would be Bitcoin. Bitcoin, man, what's up? What is going on? So for Bitcoin, we said, all right, we had these all-time highs. We don't like how it looks. It was nasty all-time highs, but we're watching the area. And so we wanted to see if this red candle could hold price to send us back to all-time highs. If y'all remember, it consolidated on that area for so long. It came up, it touched these highs, made equal highs, and then came down. So then we said the next watch list, we said, all right, well, we got to watch this fair value gap, because if this gets respected, that's not a good sign. Look how price respected it, came down, and look, now this area is gone. I could just delete that now. That area is gone. And we're making this move down into the range. This is what I told you. I said, if we don't use that area, it's going to make a much deeper move down back into this range. And the way that it's dropping, though, is not convincing to me. So we always talk about not just paying attention to fair value gaps, but paying attention to the lack of fair value gaps. So there's a lack of fair value gaps here. That usually when moves have a lack of fair value gaps, they are not believable. So now that we don't have any on this price, like, I wouldn't be surprised to see Bitcoin, shock everybody to the upside one of these days. Like, I'm not saying it's about to happen, and it's hard to pinpoint exactly what it could do that from. Like, hey, it might even come to these lows first or something. Who knows? I'm not really looking at this fair value gap necessarily, but we in it. So it could pop out of that. So you want to just be careful, crypto traders. Personally, I just would call this a no trade zone, because this is how you know you're getting caught up in chop. And this is for all time frames. It's not just for daily charts. It's like you notice that POIs or PD arrays or tools that you have in price action are not holding on either side. Like, we got the bullish fair value gap didn't bring us to new highs. The order block, no. This SIBI was wacky, I guess, but I guess it's working. But we're also not creating any bearish fair value gaps to the downside. So it's just like the delivery on both sides is nasty. And so then I don't like when price moves like that. So I would leave that alone. I would just wait. There's gonna be clean moves, literally either under these lows or above these highs. Other than that, inside of here is no point in forcing the issue. All right. So David said YM is gonna make a move very soon. We'll check it out. We on to the stock / futures side now. All right, so boom. Let's actually start with ES right quick. Let's start with ES and let's really get some context. So, man, last month, in the middle of the month, I said ES, the next target for ES is coming into 55.7850. So you gotta remember, price is down here, and I'm saying we're coming there next. That's not a random place that I called in the middle of the sky. And proof of that is just looking what has happened in the market since we touched that level, since we hit that target. We consolidated on top of it, and then y'all seen what Thursday looked like. We dropped off really hard. So obviously, getting these targets from all-time highs is not, I'm not just picking random places in the sky. It's like, no, this is because the market is algorithmically driven. So there's a strategy that I use that helps me to get the targets on the upside. And so just pay attention to how we hit that target and we're dropping off. So you see what Thursday looked like. We consolidated, rejected CE. Now we moving all the way to the downside. And then here we are consolidating. So I think that this whole area is pretty much a no trade zone. I'm not saying you can't find some scalps or some quick moves on a 5 minute and everything, but even look at the 5 minute. This is the 5 minute. Is this something you really want to take part in? I don't know. Everybody got different trading styles. My trading, I like to trade trend. I'm not saying I can't trade chop. I already showed you I ran up chop. Like, I ran up a lot of money at chop, but that doesn't mean that's something I like to do. It's low probability. I'd rather just trade easy moves that don't give me a headache and make me feel like I'm taking you know what I mean? Like the bar exam or something. Like, there's no need for that. So I just rather take the easy moves. And so I just say, take trades when price should get easy. Like, to me, I feel that if we invalidate this bearish fair value gap that we're currently like rejecting on, if we invalidate this, I think we're gonna end up coming to all-time highs. That's why I said all-time highs over here for me, most likely. I always got to see what the candles look like on the way there, because if we staggered our way up into that, and it looks like this, I'm not as convinced because once again, do bullish moves typically look like that? No. So, because then I'll know we may end up sweeping back to the downside. So I'll be, it has to, we have to see what the candles look like. But to me, I want to almost like look, I'm gonna set alerts at that level and say, all right, I want to look at the market if we could cross over this yellow line. And same thing with under this yellow line here, 5513.25. Because to me, I feel like if we end up coming here, we would have most likely cleared this consolidation area. As well as this is the part of the 4-hour fair value gap. Let me show you what I'm talking about. You see this huge green candle? This is the 4-hour Bessie, 4-hour bullish fair value gap. That if we hit this part of it, chances are we're gonna end up coming to the bottom of it. And if we come to the bottom of it, I think we're gonna end up making a move much lower, because some people may look at this and say, hey, there's a bullish fair value gap. My fault. Some people gonna look at this and say there's a bullish order block right here. They're gonna highlight these 2 red candles and call that a bullish OB. I'm telling you ahead of time, I don't think that bullish OB, quote unquote, would work. That's one that I would expect to get traded through. I'm saying that ahead of time. So if we come there and we use it and we make all-time highs, congratulations. But this is the type of order block I would ignore because of all the trading I done did, the back testing, the live trading, everything. I'm trading the formulas that have worked for me. So if I know the kind of context and kind of situations that I've seen order blocks get traded through, I'm gonna ultimately trade off of that. So this is one of them right here. I feel that this is gonna get traded through based on probabilities. So I'm not saying we can't react to it. It could react, but whatever reaction, I think is gonna get shorted right back down. Because typically, if you react to a tool like this bullish order block that's out of context, what it does is it sends you to the upside at first, only to come into a bearish order block or a bearish fair value gap, and that thing will actually be the thing that sends you to the downside. So it's like people kind of get hype at first because like, oh, it's working, and then it ends up failing you, and you really should have been paying attention to the bearish price lag rather than this. And so that's kind of the scenario I feel like is existing with this, but we'll see. And guess what, at the end of the day, I'm gonna make money regardless, because I know what it should look like if it's gonna work. If it's gonna work, being that it's a 4-hour, let's talk about that. Being that it's a 4-hour bullish order block, potentially, well, if it's gonna work, it'll come into this and the 15-minute chart is gonna start making bullish fair value gaps. So shortly after the 15-minute chart start making bullish fair value gaps, then I'll be like, oh shoot, okay, maybe it's legitimate, and those fair value gaps will get respected. But if it kind of touches it and it starts staggering out of there, be prepared for a big move right back to the downside. All right, so I'm giving you different ways to trade in real time, because obviously, this is a class for Sunday. We have to be prepared in case this move happens on Wednesday or Thursday when we not together. So ultimately, once again, stay out of the range. It gets clear over here most likely, and it gets clear under here most likely. And then a first target I have is just the lowest body on the 4-hour. So lowest body on the 4-hour right there. And if we could close under this wick, then we could really see a nice move probably into these lows. But I'm gonna take it one step at a time. Join the free community so you get the pre-market updates that we be doing. Join the free community. All right, now on YM, we already said we got to stay out of this range, wait for price to break the range. It's trying to break it right now, but it's struggling, ain't it? It's struggling. So I will watch 2 areas. I'm watching this 4-hour SIBI. I want to see what we could do here, if we're going to just tap it and reject it, or if we're going to, trade above the 50% of it. Because if we come above 50% of it, I may get bullish on YM. But ultimately, I wouldn't be surprised to see YM make a big move to the downside. You see what I said here? This yellow line. Let's come to the hourly. So for the hourly chart, you said I say under here, target the lows. So under 39,450 on the Dow Jones. Under this area, I would target lows. I would probably honestly target price coming into this bullish fair value gap from the daily chart. So under that yellow line, the next place I have YM coming will be to this purple area. So, just like ES and NASDAQ, I wouldn't say to trade this range. I would say if we break above the highs, you want to watch price action, pay attention to the candles. But if we come back into the range and we come under this yellow line, I think YM can make a really powerful move to the downside. My most ideal setup on YM would be this. I would love to see this. This would make me the happiest man in the world. That would be gorgeous. Like, if we could, if I'm seeing what I like, I could shorten this price leg, understanding that most likely we're gonna end up coming back under this yellow line, and under here it could get pretty nasty to the downside. So I would really love that move on YM, and we'll keep our eye on it. But once again, people, don't trade inside of here. You might get your head chopped off before you make the big move. So be careful. Just like I was saying on the Russell, I don't even want to trade this. This is the Russell 2000. I'm not even looking to trade this right now. This is a ticker I continue to say stay away from right now, as it's inside of this range. You can see what it looked like. This is nasty. This will chop you off. So be careful. Here on copper, this is something I'm looking for, some more downside. It's still respecting its daily SIBI. I'm looking forward to coming to this weekly VI that we had. Looking forward to coming to this area, and probably come on the sell side, honestly. But I need to see bearish fair value gaps. But I do believe that if we lose the lows from last week, so the weekly lows, if we lose last week's lows, then copper can make a pretty nice move down into this 4.1795. It could get pretty good. So if we lose last week's lows, I would like to see some continued downside there on copper. That's what I'm looking at for copper. And then when it comes to oil, you got CL. Man, CL, we've been sniping it up and down, sniping it. We caught the downside, we caught the whole upside, and now that we ran our upside target, it's like, what is next? So I'm watching two things here, because right now you got to notice when price doesn't put fair value gaps over highs. That's not a good sign. So I came down to the 4 hour and I'm like, all right, I see this whole choppy run up. What do we say about price legs that look like this? They tend to get traded right back through, right? So see how prices are really killing this whole area? This whole area is getting destroyed in these few candles. This took, how many hours did this take to develop? And then it just took 3 4-hour candles to kill it all in, all in one shot. So now I'm looking for price to probably come back into this 4-hour bullish OB. And if it doesn't respect this, then CL may make a much deeper move. Honestly, like if we don't respect this 4-hour order block, y'all, CL is going to most likely come under these lows. This whole area is about to probably get killed. You probably gonna cut that whole area. So for me on CL, I'm really watching this order block. This is a 4-hour area. So what time frame do we confirm with? A 15-minute. 15 minutes is a good time frame to confirm with. So meaning we come into this area, we start seeing 15-minute bissies come out of that area. Now you could be convinced that we're probably gonna run these highs and then make it into our next targets to the upside. But if we come to this area and we can react, but if the reaction is staggered, when the reaction is staggered like that, what do I immediately do? I look to the left. I say, okay, what's right here? Oh, wow, there's a SIBI right there. That SIBI will most likely take us back to the downside like that and start that bearish move. So that's why I say, if we do react, you got to look at how we react. What does that reaction look like? What is the nature of the movement? What is the delivery like? That's what I mean by delivery. So, we're going to keep our eye on that. So for CL right now, short term, I think it's going to come in here in the short term, but then we're going to have to see what it does inside of there. If it works out, cool, take the uptrend. If it closes under this, I think it's going to get pretty bad to the downside down in the head. So all eyes on CL there. I almost lean, my fault, for CL, I kind of lean bullish. I wouldn't be surprised to see the order block work. I kind of do lean bullish. Let me see the weekly real quick. Yeah, like I kind of lean bullish. This is a buy side target I think I had from 83.62. So if we do go bullishly, this is the next place it could go to. Just trying to remember why I said that. Because I told you I made these I made it, what was this, last night or something? I'm trying to remember why I said this. But I would say at least just focus on the most recent highs. I think it was these. Okay, it's from the daily chart. That's why. So yeah, over these highs, I think we'll come and take the next highs right there on the daily. That's all I was trying to say. All right, so now let's move down to gold. Gold, we want to see some continuation to the downside. I told y'all to be careful trading gold inside of here. Why? Because it's a range, as you know. The cleanest moves on gold will come under this range. So if we lose the lows of this range, we have a whole sell side pool here. Notice it's been consolidating on a bullish fair value gap, by the way, from the weekly chart. So this is a weekly bullish fair value gap. That's what we've been consolidating on. So now if we actually lose this area, I think gold makes a pretty nice move back down into this discount Bissy down in the head. On the weekly chart, this should be, yeah, this should be right there. All right, so basically for gold, if we lose the lows of the consolidation in the manner that looks like this, if we lose these lows and you see 4-hour bearish fair value gaps while we lose these lows, then I would target the weekly bullish fair value gap below. And then we're gonna have to watch to see if it wants to react here, because if it doesn't, I would ignore the one below it because it's gonna end up running out these red lows. So to me, I think that, you know, gold really depends on how we lose this initial one that we're in. It's the first line of defense. Under that, this whole middle area shouldn't mean anything. We should be coming to the next fair value gap. All right, so that's how we would trade this. So, you know, you can watch how we're trading. You want to see, you want to pay attention to fair value gap, and you're going to trade it like that. And that's how you know your next destinations. Now, here comes platinum. So we wanted to see moves above and below last week's, these yellow lines basically, right? So last week that was a plan. I wouldn't want to trade inside. I want to see what we do above and below this. So above it, initially we had gotten a rejection. I was like, yo, maybe this is the big rejection you're looking for. I don't know if y'all remember this. We rejected, this big red candle came in the market, but then what happened? We came right back into the range. Once we came back to this range, I already knew it was dead. And I told y'all that in the chat. I said, if we come back to 983, whatever I said, once we come back here, it's over with. And once we came back there, guess what? It was over with. We already knew the downside move was not happening. So, you know, we're still watching this area closely, and technically the body's held the fair value gap. Yes, I understand that. But right now, you want to wait for confirmation on platinum in either direction, because look at the upside. What do we say about upside that looks like this, y'all? Is this convincing? No, not convincing at all. We don't like upside that look like that. That's not it. So, but when you look at the downside, it hasn't even happened yet. So I would say if we're gonna go bearish, you want to see, you already know what I'm about to say. Bearish fair value gaps from the 4-hour. We want to see that, and it got to take out all of this liquidity that we just engineered. So if we do that, I would target the yellow line on the downside. That's gonna get pretty nasty, because we on platinum, I do see some downside on the higher time frames. Like when I look at the monthly, I wouldn't be surprised to see the monthly come into these lows. When I look at the weekly, I wouldn't be surprised to see us basically reject. I know it's kind of hard to see. Actually, let me do this. So let me show people this in case you don't know. On TradingView, if you have like a daily POI and you don't want to see it on a weekly chart, double click on it, go to visibility, and check off the time frames that you don't want to see it on. Like, I don't want to see this on a weekly right now, so I'm gonna check off the weekly, and I don't want to see it on a monthly, and I'm gonna press OK. I'm gonna do the same thing for this daily one. I don't want to see it on the weekly. I don't want to see it on the monthly, so that's gone. All right, but look, when I go back to the daily, it's there again. You know what I'm saying? So hopefully y'all got that little trading view gem. But anywho, here on a weekly chart, you see we may just be rejecting this. Look how we rejected the 50% of it so far. We may reject this and come back to the downside. So, you know, this retracement could get shorted. So I wouldn't get too overly zealous on here, because look, even on the daily chart, y'all, on the daily chart, there are no fair value gaps to the upside. What kind of reversal doesn't incorporate fair value gaps? Those are so suspect. So I just want y'all to be careful getting, you know, when moves look like this, just never be surprised if we come right back to the downside. And y'all welcome. I'm glad that tip was helpful for you. So just be careful. So platinum, we waiting on some confirmation. For SPY, this for options people. Y'all know, even though I trade options, I still chart on futures tickers because they move the same, and futures tickers have way more information. But for SPY, this is a plan that I have here. I would say, notice that this gap that we had created between Thursday into Friday, what happened? We came up, we balanced out the gap, we rejected at 50% of it. That's what we like to see. So we want to see if we continue to hold that. I don't want price coming back and validating this gap, meaning like, I don't want price to fill out this whole gap. I don't want to see that, because if it does, I'm gonna assume that it wants to make a move back into them all-time highs I was talking about. I want to see price stay kind of in this area. Even if it were to sweep buy side real quick and do something like this, I'm cool. But I don't want to see price especially close over this hourly candle. So that red candle that I'm pointing to, if SPY closes over that, bro, I'm talking to all-time highs, shit like that. So over this, I really like all-time highs on SPY. Anywhere under this, I'm looking for SPY to reject. And remember, this is the in-between part of a price leg. So what do I mean by that? What do I mean by that? When price makes a move down and you're kind of at a spot where you're battling tools. You have bullish tools on the left that's causing bounces. You have bearish tools in your current price leg that's causing rejections, meaning you have a bull case and a bear case and price is consolidating. You don't have to trade that segment because that's where they typically mess people up and mess accounts up because there's sentiment on both sides. So instead of, focusing on, because, right now price has reacted to this fair value gap. You see what I'm saying? So it's like you have that bouncing price, you have the gap rejecting price, as gaps are inefficiencies. So let's keep that in mind. So you have that the gap rejecting price. Just be careful. I would say just wait for it to get invalidated. If we come under these lows, I think we're gonna continue into this line and then continue into this line. I mean, my fault. This is the not that yellow line. I meant to say we're gonna fill out this at. Once again, I made this yesterday. It's a little blurry. So under 543, then I think we're gonna end up filling out the gap all the way down here at 537, rounded to 537. For what I'm saying? So that could be a pretty nice move on SPY. So really a lot depends on what happens in this middle area because it could get pretty bearish, honestly. But once again, y'all, the most for me, the most confirmed one is what I wrote right here, 541.70. Like, I really don't see us not making a bearish move under 541.70. Like, if it happens, it happens. But 541.70 is the safest level I have on SPY to see some more downside. So, like I said, you don't even have to trade anything in here. You could wait for the easy part to the price leg, which should be under 541.70, or really like over this red candle on the hourly. Everything else you could really stay cash on, in my opinion. What else do I want to say about SPY? Oh yeah, same thing with these. No, never mind. That's QQQ I'm picturing. All right, so with that being said, let's go to QQQ. So QQQ, remember I gave you guys these targets in the middle of May. Look what happened when we got to the second target. Is it coincidental that that's exactly where we are rejecting from? Like, we talked about that price target somewhere in here. Price ran. These is all-time highs, and that's exactly where we have rejected. It's not a coincidence. Just know this market is algorithmically driven. So now that we got there and we rejected, same vibe. If we could lose these lows, especially losing them with fair value gaps, then I think we're gonna make a move into this gap. I would just think we're gonna come back into this gap on the hourly chart. I would say the absolute safest target to the downside will be right here at 473.50. That's the safest target to the downside. But ultimately, you should probably come into that gap, to be honest with you. All right, so I would say price alerts is once we get to the lows, we can't sweep those lows either. So this is what you don't want to see. You don't want to see us take those lows and then come back into the middle of the range. If that happens, that's not a good sign. So remember, if we take these lows, you do not want to see us come back to the middle of the range. And this applies to what I said about SPY. This applies to what I said about NQ and what I said about ES. You don't want to see us take these lows and come back in here. You want to see us take these lows and continue. If we come back up, we got to come really to just the very bottom of the range, to be honest, like somewhere in there, and just reject again. You don't want to see us come back to the middle. It's not a good sign. Then I anticipate we're going to make a move back above these highs. So that's all I'm saying. I'm trying to prepare you for every scenario, so you should never just be lost out here. And price is more difficult than simply saying, under 540, 530 is next. Like, nah, it depends how we take 540. So you should know how to adjust on the fly. And there's a skill set in that, and that comes from the price signatures. So I'm trying to share with you like certain things that shouldn't happen if we're bearish. Like, if we're bearish for real, what I just described should not typically happen. So if you see that, yes, your antenna should go up, and you should maybe trim your position and stuff like that, or maybe even cut the whole position, because it's just not a good sign. All right, so now let's go into certain tickets here that could make a potential move and see what gems we could take from it. But I also wanted to show Apple real quick. Once again, when Apple was down here, Remember, these are all-time highs. Where was the target we had? At 217.39. What has happened since Apple hit our all-time high target? Rejections. Just showing you more and more. This is for all markets. It's not just indices. It's not just options, tickers. It's bonds. It's the dollar. It's everything. It's commodities. All these tickers work on the same algorithm. They all work with the same technical strategy. So what I teach ultimately applies to everything. So here we are in Apple seeing the same thing. We rejected the same place I said, and we're coming on down. And I told you guys actually on the previous watch list, I'm waiting for price to come into this fair value gap. I was waiting for Apple to come down here, and we're pretty much here right now. And it's from the daily chart. And so what was the plan here? We're watching if this green arrow could play out on Apple. I'm really watching to see if we could bounce off of this fair value gap anywhere on the upside of it. If we close under the 50% of this fair value gap, then that's not a good sign. And I would think that Apple is most likely going to make a move way back into this range, like probably coming back down into here, honestly. Like, that's just not a good sign, is what I'm trying to say. So if Apple's going to be bullish, it should look like this. If it's going to be bearish, then we're going to trade through this fair value gap. And if we do, I don't expect price to bounce on this red candle. If it does, it'll get rejected again and then trade back down. So when I say I don't expect it to bounce on it, I mean I don't expect it to make us generate new highs. It could react to it. Yes, it could react to it. Let me be very clear. It could react to it, but I don't think it's going to generate new highs. I think it's going to send us into a bearish fair value gap, probably that'll send us back to the downside. So those are something, those are two setups we're looking for on Apple here. So what do we look for again, y'all? It's a daily POI, So what time frame should confirm it? The hourly. Hourly is solid. Look for hourly fair value gaps coming to the upside. And if it does, where are we going? The second target on Apple, 235.15. So Apple high watch inside of this area. High watch. I don't think I want to talk about Adobe. This was last week. We were talking about Adobe maybe breaking out of this at his earnings gap. And we were looking to see if we could fill in this gap here at 568.86. There's a gap that we have not filled out. So, Adobe, I'm still looking for potential continuation to the upside, but I didn't even really plan on showing this again. We're gonna see what's up with that. That's a potential setup. I like AVGO. Under here expect gap fill. Well, yeah. Well, is that what I was trying to say? I went through 180 something tickers. I'm not showing 180 something. I'm showing you guys the ones that I liked, but I went to 180 something tickets. So you gotta remember, some of this stuff is a little blurry in my head. But on AVGO, what do we see here on the daily chart? We have this gap. Coming back into this gap is not a good sign after already bouncing out of it. So now, yeah, if this doesn't work here, we're gonna end up filling out this gap I think I was talking about. Yeah, I'm probably gonna fill this gap. If we come to this yellow line, I honestly feel like Broadcom is gonna come to this area. If we fill out this gap, I got Broadcom coming to this area next. All right, so I will. It's on high watching here. If Broadcom invalidates this, let's draw this. So if Broadcom finds its way to invalidating this bearish fair value gap, especially if it's on the high side of it, it's gonna run all-time highs. So the bullish plan is, the high side of this area, take it to the upside. The bearish plan is, if we come under 1554, then I think it's gonna make a deeper move to the downside. So Broadcom definitely has potential. It's not that one. Disney, I like Disney too. This is a good one. I like Disney. I might definitely be taking this one because it has potential. So on this monthly chart, we had this run above buy side. We still rejecting this monthly SIBI. We still rejecting this monthly bearish fair value gap. We in this case, in this specific setup, you would want to see price hold the upper 50% of the bullish fair value gap. So this is where you have like battle of the fair value gaps, where we reject one, we come back into one. So if the bullish one was gonna win, we probably would be bouncing off of the upper 50% of it and coming back to the upside. So in scenarios like that, if we close under the 50% of it, like we're already we traded so deeply into this, I don't have much faith on the bullish one. And to me, if this does not work, then I think Disney has potential to come into these lows. Honestly, I really think it has potential to come to those lows, and that would be a really big move. So we'll definitely keep our eye on it. But if Disney could, in the ultra short term, like ultra short term, like super ultra short term, if Disney comes under these lows from, what was that, last week, it's gonna fill out the monthly BTSMC. So like literally just to, let's remember that a fair value gap is what you hear in the word. It's a gap. So there are, without saying too much, there are levels inside of fair value gaps. And so all I'm saying is if we lose this low right here, that's why my price alert is near the lows, because I want to see how we trade there. Like, for example, I don't want to see us stagger into those lows, because then I'll be like, all right, never mind. But if I notice we having a pretty nice move to the downside, I'm gonna get involved, because under these lows, I think we're gonna at least fill out the monthly BTSMC. So I marked off where that is. That's 97.57. So even just a move under here would be nice to come to 97.57 just to fill out the monthly BTSMC. Just even on some day trade vibes, we'll fill that out. But I told you macro, I do feel that once we invalidate this, which it looks like we might, then it could definitely see its way to the downside, at least into this monthly BTSMC, which I don't have high hopes on. I think it's gonna take out both of these lows. You gotta realize that we don't engineer liquidity for no reason. So you see this quote unquote triple bottom, you got a low right here, a low right here, a low right here. That's too clean, and that could definitely get taken out. So I wouldn't be surprised to see Disney make a strong move back to the downside. And when we take these lows, it's gonna be a pretty bad sell. Like it's gonna be a pretty aggressive move. I'm gonna tell you right now. We gotta get there first. So we gonna keep an eye on that. I already showed y'all DraftKings, actually nothing to say there no more. Home Depot, I don't think there's nothing really I want to say besides like we're still reacting to this monthly bullish fair value gap. We were watching upside. We ate on these plays last week, and I took profits on it already. But it's making a continuation. I don't see anything bearish here. It's respecting all bullish tools and price action. For example, you see that they use this gap as a level of support, and so let's see if it can take these highs and just continue to the upside. Home Depot just got more upside in it, most likely. Kroger is something I like. Not that many tickets left, but let's keep this going. Kroger is something I like here. Under these lows, it could get we can have a pretty bad sell on Kroger. So if you look at the monthly, which is what we start with, we rejecting inside of this RB on the monthly. Beautiful. If we're truly bullish, what did I say about this bullish fair value gap? Look how we not really respecting the upper half of it. We're all the way at the lower half of it. And what did I say about it also being an inefficiency? What did I say about a fair value gap being a gap? Look at the closure of the monthly fair value gap. Notice that price came down here, and that's all it wanted to do for this objective. It came to the downside and filled it out. That's all it wanted to do. But then it can't. So if we were really bullish, this rally should have held. There's no reason to come back to these lows after we already met our objective of filling out that fair value gap. So since it came back to these lows, I just have a feeling that it wants more downside on it. And when I look at it, I'm like, okay, well, if this monthly fair value gap is not the one, I know there's a fair value gap under it. But to me, I don't think we're going to use this fair value gap to send us back to the upside. And once again, that does not mean we can't react to it. I just think that it will get shorted and we're going to take out these lows. So, no matter what, we're going to use lower time frames to confirm. So if it's a monthly area, you want to make sure that the daily, if it's a monthly area, you want to make sure that the daily doesn't start making fair value gaps in the direction that you don't want. So, keep your eye on it for confirmation. Now, Lyft is another ticket that I like. I got alert set on Lyft. Nice small account ticket too. So Lyft, here, I think Lyft is coming for these lows. You have the weekly lowest body as a low-hanging fruit objective. You got this weekly SIBI here with a VI overlap. Good. I don't even know if we'll come back in here. I actually would not want us to come back in here. That doesn't mean I'm bullish if we do. I just mean when you have fair value gaps that are not getting revisited, that's a really good sign that price is strong in your direction. So like, yeah, we have a weekly fair value gap here. I don't even want price coming in, to be honest. I would love if Lyft could reject this SIBI that we just came into, or actually we're right next to, really that we just created rather. Let me drag this down. We just created that SIBI. Oh no, it's an hourly one. My fault. I'm on the wrong time frame. Yeah, yeah, this hourly one. I would want Lyft to reject this one and come down. I don't even want Lyft doing this, right? I don't want Lyft to close above these highs and come in here and then reject. I don't even want to see that. I want to see Lyft stay really weak, really weak. I want to see Lyft stay really weak, reject this, and come down to this yellow line. That would be lovely. But ultimately, the higher time frames tell me to stay bearish on Lyft. So that's why we always come to the higher time frame, because it tells you which direction to really pay attention to most. And when I look at the higher time frame, like the monthly and the weekly, it's telling me to stay bearish on Lyft. You know what I'm saying? So you just have to ask yourself, okay, if I know it's supposed to go to the downside, what could take us to the downside? And so you look at what you have on those time frames below you and say, hey, what can it reject? So if the weekly told me to stay bearish, I'm looking at the daily and I'm saying, okay, on the daily, do I have any POIs that I like that could take us back to the downside? Like on the daily, I was like, I'm not really seeing much. But then when I come to the 4 hour, you got this SIBI. You come to the hourly, you see, you got this SIBI, like I said. And so now you're saying, okay, cool. This could work. If this doesn't work, then I'll look at the weekly SIBI above. But ideally, this one should work. So by the way, it's an hourly SIBI. So what time frame do we confirm the hourly with? Well, you may want to look at the 5 minute. So we come into an hourly SIBI. If we make 5 minute bearish fair value gaps coming out of there, oh yeah, Lyft could get pretty bad. So I will look at the 5 minute to confirm an hourly POI. That's what I mean by confirmation. I don't just get in because we're in the POI. Like, no, I want to see confirmation. Just showing y'all low-hanging fruit objectives on McDonald's. Look, McDonald's is a ticket we played to the downside last week. Money was absolutely made. And it's crazy to see that I got out at the exact bottom again because of the lowest body target. Yo, people, like, I want you to peep how close the lowest body of the daily was and the lowest wick. And I'm in sales. I'm in puts. It's options. I was in puts on McDonald's. Yo, literally, y'all, I took my profits at the lowest body because when we got there, the 1 minute and 15 second both were doing something I didn't like. I don't even know how to find it right now. I'm somewhere lost on that chart. Yeah, they both were doing something I didn't like. And what did I not like when we got to the lowest body? I didn't like the fact that we didn't respect this SIBI right here. This SIBI was not getting respected. So as we came back up, I'm like, I'm done. I know what y'all about to do. I know how this goes. You know what I'm saying? So it's like but getting out was the smartest thing I ever did because golly, y'all see how they took everything back. So that's why I say just focus on them low-hanging fruit objectives and price action. Now let's keep it moving. Okay, this one has potential as well. This one has potential to the downside as well. I was watching this before, it's been consolidating. So I want to leave. I only want bearishness on this ticker. So if we lose 84.91, I think it makes a strong move to the downside. It's really that simple. Like if we don't lose that, then I don't want upside on this ticker. It just, to me, I only want it to break to the downside because when I look at the monthly and the weekly, it's telling me to stay bearish on it. Like I don't think we're gonna bounce here. I think we're gonna end up potentially taking out these lows. If you want to have a low-hanging fruit objective target, what do we always talk about? The lowest body at the swing point. So you could take it to 81.26. That's a nice little $5 move. Or if you let your alert go off, like a $4, $3 move. But yeah, so that's all I want on OKTA. I only want downside, but I think it definitely has room to take out all of these lows. But we'll see. It all once again depends on how price looks heading into the area. Now, plug. Was I skipping plug? I might be skipping plug. Let me see. I know I was bearish on plug. Let's see what I drew here on these arrows. What we got here on plug. Another small account ticker too, my people. We got a small account. Oh, this was last week's joint. This was last week. Look at last week, y'all. We were saying, all right, plug, if it retraces, we want to see if it rejects this SIBI. If it just goes, it just goes. And it's self-explanatory. Obviously, last week, what did it do? It just went. You feel me? But it never even came to this SIBI. Beautiful. And the plan last week was if it didn't reject that SIBI, it's bullish. If it didn't reject it, it's bullish. Obviously, it never even got there. So it was self-explanatory. But we were bearish on the plug and we wanted it to come into 225. And I still want that. And I'm still looking for plug to take out this sell side liquidity. So on plug, now that we're making our move to the downside here, you want to watch the nearby POIs that you have. So this is such an impulsive move. Those are so tough because you don't want to get in the middle of a move, but like you want to watch nearby things in price action. Like I want to watch, these two green candles. I wouldn't want to see price come back above these green candles personally. Wouldn't want to see that. I would want to see price reject under the 50% of this area and just keep going to the downside because we're getting really close to this target here at 225 on plug. I think it could get energetic to the downside under there. So you don't want to see like deep retracements in that area. You really don't. You want to just see a continuation. But no matter what, any rally on plug, I do think gets shorted. Even if we do, I think it eventually gets shorted. We just want to be careful getting caught up in that. And that's why it's always tough to trade at the bottom of a move. Like we just had how many red days in a row on plug? So I'll say be careful. We know where we want to go. But we're a little bit late to that move if you're not already in it. All right. I think this is probably my last. Take a Twilio, right? I think I had two more. So two more. Twilio and X. So let's go with Twilio. Because this one looked good. This one was looking good too. For Twilio, what's the process? We come to the monthly, we look for direction. Monthly, we getting the same rejection here that we did before, which is really coming from this weekly SIBI. My fault. This is a weekly SIBI, but we rejected the same SIBI 3 times. To me, I think we're just gonna target these lows here when I look at the weekly chart. The monthly chart, there's nothing bullish about this, but obviously we're also in a range, so you have to still be careful. But the weekly is looking pretty solid. We broke this weekly consolidation recently, but what do we talk about when consolidation breaks? If we make a fair value gap on that consolidation break, first of all, I don't want to come back to it, but if we do, we got to respect it really sensitively too. Like I don't even want us coming back into this daily SIBI, honestly. I want us to reject right away. Pretty much the gap that we just came to, I'm going to reject that. So notice where my price alerts is at. My price alerts is at the 50% of this gap, because if we don't reject right around here, I'm not really too bullish. I'm not too bearish. I'm not too bearish on Twilio. We have to reject like almost right away. I'll watch it in this overall gap. I'll watch it and all, but I don't even want price coming up to this SIBI up here. I really don't. I want us to reject this gap and come to the downside. Now, if we got down tomorrow and stuff, that's why my price alert is here, because to me, if we come this far below, then we're gonna, continue to the downside, make a lower low. We're gonna fill out this gap that we never filled out before, which would take us to 5120 and most likely even further down. If I check the monthly, yeah, you could target the monthly lowest body if you want to. That's always a safe target. So we got the monthly lowest body right there at 50.99, stuff like that. But everything depends on that daily gap on Twilio. A lot depends on it. I don't want to see us come back this high, but if we reject in here and then it comes back towards the lower side of this range, it's over. I think Twilio makes a really nice move to the downside. And then last but not least is X. So X, same vibe. Monthly direction. If we were bullish, we would have bounced on the upper half of this green candle. There's no reason to be down here if we still bullish. No. And then you see a little baby reaction, and then it's getting shorted right back down. Cool. I think we about to catch the next leg to the downside, but you want to see price break this range first. Let's break that range first on a weekly. And so that's why, for me, the safe price alert is 34.84. The speculative price alert is 36.34. All right, so if we break 36.34, we're probably going to take out this sell side liquidity. If we take out this sell side liquidity, we're probably going to make a move to the downside. But once again, just when I say to eliminate all cases, I really would be so surprised if we went bullish off of this. I'll be so surprised if we went bullish off of this. But just in case, my price alert is under that. Because honestly, under this, I don't see anything that should reject us from making a deeper move to the downside. There's nothing here that I like to break us. To send us back bullish. You feel what I'm saying? So I don't even think this will work in the first place. I highly doubt this. I would never, ever look at this fair value gap as something to make us bounce, ever. When I say bounce, I'm talking about to make new highs. And if you peep, we low-key did actually, I just peeped that. We low-key did already bounce on it and see that it's not really holding. This is what I'm talking about. It's not even really holding price. And that's what I mean. You can get a reaction, but I don't think it's gonna work. But you know, on some just in case vibes, like I said, let us break the range. And if it does, X, when I look at the monthly, X will come into this monthly busy next. It'll probably come in next. So under that price alert at 34.84, X could come down to pretty much $30. You could round it up and say $30. That'll be a really nice move. That'll be a really nice move. Like, look how much room you got between where price will be to the purple. That's a lot of money that can be made on a contract. All right, so that's that. And then for all ticker requests, I'm gonna do that off the recording. But that's what I want to share for the watch list. And if you want to be one of the people that could request tickers, definitely join the free community so you can be on the Zoom with us where I can answer questions, answer comments, and all of that. So with that being said, you know, subscribe to the channel if you're watching this on YouTube, like the video, and join the mentorship that starts in just probably like about 2 weeks from now, man. About 2 weeks. A bunch of lives is gonna be changed. So tap in with us. The links are in the description. And with that being said, that's all she wrote.